Good morning and a warm welcome. Holly Shields here reporting to you live from Sydney for Kalkine TV, and you're watching the Global Markets Roundup. Let's dive into some key highlights and happenings from yesterday, starting with the US market. Well, global stock markets continued to fall on Thursday as inflation fears persisted and expectations grew that the US Federal Reserve will tighten policy in the coming months. MSCI's gauge of stocks across the globe shed 0.62%. Meanwhile, US stocks closed the session in red on Thursday, September 30, as the Delta virus threat painted a gloomy picture for the economy and investors stayed away from risky bets. The S&P 500 fell 1.19%, while the Dow Jones fell as well 1.59%, and the Nasdaq Composite Index dropped 0.44%, while the small cap Russell 2000 was down 0.94%. The top three benchmark indices were on course to their worst quarterly performance since 2020. And there's been a spike in Delta infections in recent weeks, although the health agencies are now better prepared than they were in the first wave of the virus earlier this year. Also on Thursday, US Congress passed a crucial bill to avert a potential shutdown of the government in part, and the legislation would ensure that the government's funding through December 3 continues. All this as the House passed the bill in 254 to 275 votes just hours before the current funding was due to expire. The legislation provided $29.6 billion in disaster aid, among other expenditures. Meanwhile, President Biden was expected to sign the partisan bill before the midnight deadline. And communication and tech stocks were the top gainers on the S&P 500 as industrial and consumer sectors were the bottom movers. 8 of 11 index segments stayed in the red as well. And looking at the futures and commodities market, gold futures were up 2.01% and silver increased as well 3.16%, while copper fell 2.23%. Meanwhile, Brent oil futures increased by 0.11% and WTI crude was up as well 0.33%. Onto the bond markets now, and the 30-year Treasury bond yields were down 1.95%, while the 10-year bond yields fell a whopping 3.25%. US dollar futures index decreased by 0.08% as well, but with that, it is time for a short break now. Stay tuned with Kalkine TV because I'll be back with the Australian and Asian market updates.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With Kalkine TV.
Are you sick of paying through the roof for a product that doesn't truly suit you? Want to make sure that you get the best deal possible? Then let us help you. At Kalkine, we do the research, run the numbers, and take a look at the true value of the product to make sure that you're informed as a consumer. Whether it be the best streaming service to suit your binge-watching desires, the right broadband and NBN plans to ensure a no buffering experience, saving money with your energy, gas, and mobile plans, or treating yourself with a bit of retail therapy. We will break down all the details about every single deal, what's in it, how much it costs, and whether it's worth it for you. If you want to save money and stay informed, then subscribe to the channel and press the bell icon, as we will be rolling out a stack of content to keep you in the know.
Welcome back to the Global Markets Roundup on Kalkine TV. And to Europe now, European stocks ended flat on Thursday as declines in travel and leisure limited gains in miners, while ending the month with falls of over 3% on worries about a slowing global economy and higher inflation. The Pan-Regional Stocks 600 index was 0.05% lower, with miners rising 2% and travel stocks falling 2.2% respectively. The London markets traded in a red zone after investors digested the recent quarterly UK GDP data. According to the latest figures from the Office for National Statistics, UK GDP expanded by around 5.5% during the second quarter of 2021 when compared with the prior quarter. And to Asia now, Japan's Nikkei share average wrapped up on Thursday as its best month since November of 2020, even as markets fell for a fourth straight session on concerns over China's economic growth due to the worsening power crunch. Nikkei slipped 0.31% but posted a monthly gain of 4.85%. And the Rota Topics lost 0.4% but closed out September with a monthly rise of 3.54%, its biggest since March. And Chinese stocks closed up on Thursday as weaker than expected September factory activity raised hopes for more policy easing, while power-intensive sectors rebounded after Beijing stepped up efforts to quell fears of a power shortage. The Shanghai Composite Index gained 0.9% and the blue chip CS1300 index rose 0.7%. Over to Korea now, and South Korean shares rose on Thursday but ended lower on September 4th in their biggest monthly decline since March of last year. Investors assess the impact of skyrocketing energy costs on inflation and a broad sell-off in tech shares. The benchmark Kospi rose 8.55 points or 0.28%, and at market close on Thursday, the ASX closed up sharply, gaining 1.88%. A number of Australian companies will be paying their latest dividends to shareholders today. Monadelphous Group Limited, Origin Energy, Pro Medicus and Treasury Wine Estates are some of the major names. The Aussie and Kiwi dollars were struggling to regain their footing on Thursday after a broad surge in their US counterpart breached major chart bulwarks and tripped stop-loss sales. The Aussie was hanging on at 0.7204 cents to the American, having shed 0.9% overnight to a five-week trough. The break of support encouraged fresh short selling by momentum funds, likely eyeing the August low of just over 0.71. Well, that is all for now on the Global Markets Roundup, but keep watching Kalkine TV for more live market updates.